So, back on October 30th, 2025, it really looked like the world's two biggest superpowers were pulling back from the brink. After this really bruising trade battle, President Trump and President Xi announced a truce, and everyone was told, hey, this is a massive win. But here's the thing, the real story isn't about peace, it's actually about weakness. And President Trump, well, he sold it as an absolutely historic victory. He called it amazing, a conclusion on many important points, and he even rated it, get this, a 12 on a scale from 1 to 10. Now, with that kind of praise, you'd think the markets would just, soar, right? But nope, they did the exact opposite. And that right there, that's the central mystery we're going to unpack. Despite all this triumphant talk, the financial markets were, well, they were skeptical. Stocks in both the US and China actually fell. It's like investors everywhere were just saying, yeah, we don't buy it. So the big question is, what did they see that everyone else missed? Okay, to really get this, we have to go to the scene of the action. Picture this, the APEC summit in Busan, South Korea. This was a seriously high-stakes moment. It was the first time Trump and Xi had met face-to-face in 6 years, and their first meeting since Trump started his second term. You can just imagine, the air was thick with tension. So the backdrop for this whole summit was this brutal tit-for-tat trade battle that had been going on. The US was threatening to slap on even higher tariffs, and China was getting ready to weaponize its control over those critical rare earth minerals. The bottom line is, both economies were really feeling the pain. So both leaders show up in Busan pretty desperate for an off-ramp. So what did they actually agree to? What was in this Busan agreement? Let's break down the solution they came up with. The deal itself was a classic piece of horse trading. So on one side, the US agreed to cut its average tariff rate on Chinese goods from 57% down to 47%. And in return for that, China promised a few things: to crack down on fentanyl production, to buy a whole lot more American soybeans, and, this is the big one, to suspend its threat to cut off those rare earth minerals for at least 1 year. And this really lays out the transactional nature of the whole thing, right? Let's look at the give and take. The US gave a 10-point tariff cut. In exchange, it got China to act on fentanyl, soybeans, and rare earths. Meanwhile, China gave up those concessions, and in return, it got the tariff relief its export-driven economy so desperately needed. So on paper, it kind of looks balanced, right? Which brings us right back to that big mystery. If the deal seemed to have something for everybody, why on earth were investors so unimpressed? Well, the data really tells the story here. Yeah, the numbers just don't lie. Check this out. On the day of the big announcement, the Dow, the S&P 500, and the tech-heavy NASDAQ, they all closed down. Now, this wasn't a crash, not by any means, but it was the exact opposite of the rally you'd expect when a massive trade dispute is supposed to be over. The market was sending a crystal-clear signal of doubt. And it wasn't just stocks. It was the same story over in the commodities market. Look at soybean futures. They spiked for a minute on the news, but then they fell right back down. And why? Well, because traders were skeptical. They were thinking, promises are nice, but we want to see the actual purchase orders. So what is really going on here? Why were both sides so eager to make a deal? And why were the markets so skeptical? The answer, it turns out, lies in a concept that perfectly, and I mean perfectly, describes the US and China right now. And that phrase is giants with feet of clay. It's a powerful idea. It suggests that while both of these nations project this immense strength on the world stage, they're both actually standing on some pretty shaky foundations. They're plagued by these deep domestic weaknesses that really limit their options, and in this case, pretty much force them to the negotiating table. See, this deal wasn't really a show of strength at all. It was an act of mutual desperation. For the US, the big vulnerability is its critical dependence on China for those rare earth minerals. At the exact same time, China is grappling with a collapsing property market, soaring youth unemployment, and slowing growth. A full-blown trade war would expose these vulnerabilities for everyone to see. Each side needed a pause because their own internal problems were just getting too big to ignore. And that right there, that mutual vulnerability, that's the key to unlocking why the market reacted the way it did. Investors, they just looked right past all the triumphant speeches and saw this deal for what it truly was. Market strategist Charu Chanana, I think, summed it up perfectly. She said this is risk-managed trading, not a clean risk-on environment. So what does that mean?
Well, risk on is when investors are confident and they're buying everything. This deal created the opposite. It's basically investors saying, okay, we're relieved the bleeding has stopped for now, but we are not betting on a full recovery. And the big think tanks echoed this exact same sentiment. Max Yoli from Chatham House had a great way of putting it. He called the deal a fragile floor. It might stop the whole relationship from completely collapsing through the floorboards, but it does absolutely nothing to fix the huge fundamental cracks in the foundation. All those deep disagreements over technology, IP, and industrial policy.
But here it is. This is the single biggest reason for all that market skepticism. Buried in the fine print was the real catch. This trade truce, it isn't permanent, not even close. It has to be renewed every single year. That ensures that the trade war hasn't actually ended. It's just been put on an annual timer, which basically guarantees that these same tensions are going to flare up again and again, creating constant volatility.
So when you boil it all down, the Busan summit wasn't a resolution. It was just a tactical pause, driven by desperation on both sides. It bought both leaders some time, sure, but with all the core issues still sitting there, completely unresolved, and a one-year clock now ticking, it leaves all of us with the ultimate question: what happens when the clock runs out?